right, good day everyone, and this is Daniel here again. Welcome to TP Trades. And today I'm going to be giving you a simple strategy that you can go through, you can use and trade. Yes, and before I start, I would like to say these things. This method is not a method where you are going to hold your 5,000 or 10,000 and send it to 1 million. This is a method which promotes steady income growth. Yes, steady income growth. Then another thing I would like to add is that the forex market, they are risky. So you are not going to win every time. I'm sorry if that's not what you wanted to hear, but you are not going to win every time. Some days you are going to take a loss. Yes, okay. Then another thing I would like to say here about their starting balance. You need to have a good enough starting balance. A good enough starting balance. Yes, a good enough starting balance. You cannot start here with a low balance, especially as a beginner. Yes, for beginners it just was. So the method is something that you need to take it and also work upon your trading style. So what I'll be doing here, just I'll be giving the idea you get. I'll be giving the idea on another day. Maybe I'll come then show you how you actually use it using a live example, like me trading using a method. So here am I using the Euro USD. Is it Euro USD? Euro JPY. Euro JPY. Let me switch. Let me go to Euro USD. Now you can it works on any pair. It works on any pair. It works on any pair. So I'm on a 15-minute time frame. Now the way this method works, it is adapted from ICT. If you have heard of it, ICT, inner cycle trader. That means it is a time-based model. But now we're not going to be working with the fair value gaps, and if you know what he does, then I'm not going to be working with that. So roughly, what I will this method, this idea, let me say this idea. What this idea will be showing you is that we come to tap on it, go to Henkin Ashi, right? I'm not going to be talking about lines to the other blocks, no. I'm going to take you to the Henkin Ashi charts. Now the Henkin Ashi charts, they show smooth trend. Okay. From just by looking, you can understand where I'm driving to. Or this somebody bought here, you see, going up, somebody sold here, going down. You get. So the Henkin Ashi charts show clear trends. That's the advantage of this chart. It shows clear trends. Alright, I've changed my color. That's the advantage of this Henkin Ashi charts. Now note we are on the 15-minute time frame. We are on the 15-minute time frame, and now we are on the 15-minute time frame. What are we looking for? I would like you to take your interest to candles, any candle that looks like this. You see, flat head, then has a wick under. Normally this would be a red candle. From the way I've drawn it, this would be probably a red candle. That's how the red candles would look like. Or let's just see is bullish, right? So another candle will be like this: flat bottom, long head, and you'll probably be blue. You get. So these are the candles I would like you to watch out for using this idea that I'm trying to put forward. Remember, it's not a 100% sure something. It's not something you're going to hold and try to take your small balance to 1 million. Yes, and in fact it has risk. Let me put it that way, it has risks. At times you work and you will not work. So when it doesn't work, don't be challenged, but the probability of it working is high. The actual probability of this method working is high. It's actually high. So there's little to fear. So actually, these are the kind of candles that were candlesticks we're looking for, right? A flat, in a case where the market is going down, that's red candles. Like in this case, we're looking for a flat head, the long tail. If the market is going up, we're looking for a flat bottom, the long tail. All right, and note we are on the 15-minute time frame. So what's the idea? The idea is simple. We wait for the market opening time. Let's just say on New York session or London session. Normally, London session will start at, I'm sure that's 8 p.m., 8 a.m. London time. So maybe you don't have any time up. You should probably have it to mark these times. That's when you can start looking for trades. Yes, so 8 a.m. London time and New York time. This for Euro USD, right? So you can trade it at 8 a.m. on New York. Basically, there are other pairs like Japanese pairs, the Asian, which will have something like maybe 1 midnight. Yes, now it's actually midnight. So the Japanese pairs will be open. Japanese pairs, that means they are like this money there right now. The volatility is a little bit higher. Yes, the way the market moves a little bit higher. So something like Euro USD, we have 8 a.m. London time. Then we have New York time, that is as from 8 o'clock New York time AM, right? 8 a.m. New York time. Sometimes even 9 a.m. New York time. So from 8 a.m., 9 a.m. going upward. Can be pressing buttons there. So actually we wait for those times. So now using the broker, I've mastered some time, like when, or just say right now, right? Okay, this December 9. I know that at 9 o'clock it was 10 o'clock here. So let's go back a little bit. It was 7 o'clock and this is 8. It's 8 o'clock, right? This is when the London session is starting. Remember, 1 euro USD. So the method, as I was saying, is simple. You are looking for any of those candles, whether the one that is going up. We are on the Henkin Ashi. We are looking for candles that are having that flat bottom or flat head. In the case the market is going down, we're looking for something like this. If the market is going up, we're looking for something like this. You get. So we come into the market at that time. Remember, we are on the Henkin Ashi charts. And we look for such a candle, and bam, here is it, right? Here is the candle. Simple. So we have seen this candle. Look at this particular candle in the middle, right? Yes, we discover that it has that shape that we're looking for. It has that particular shape. This is a flat bottom here, and this is a long wick. You get. So once you see this candle formation, that means this 8:30, right? That means at 8:45, since we're dealing with the 15-minute time frame, I will be looking for a candle, a pattern around 8:45, right? From 8:45 upward. So I go down to my 1 minute. I'm looking for a signal now. I've already seen what I can call a signal, a direction signal. So the first thing that I've seen on the 15-minute time frame is a direction signal. That means it's telling us that okay, we're going up. You get. It's telling you the direction. That's what you get from the 15-minute time frame. Then now when you come to the 1 minute, we're looking for entry signal. We're looking for an entry signal. So now we're looking for a signal from 8:45, right? This 8:40, and we're looking for a buy signal. Why? Because our 15-minute direction signal tells us that we're going up. This 8:45 right here, and it's showing a red candle. So now how do we buy? We buy when the thing changes color. You understand? We buy when it changes color. The only thing is that we don't know beforehand what will happen. If not, you could have bought here. You understand? As you see, as it changes color, bam. As it changes color, bam. As it changes color, you get. So as it changes color, we sell. As it changes color, we buy. So that's your entry. Once it changes color, you enter. As you change color, you get out. So now we have seen on the 15 minute that we're going up. So this 8:45, 8:46. As you can see down here, 8:46, right? So it has actually given a sell signal here, but we're not taking it. Why? Our 15-minute direction signal told us that we're going up. So I'll wait for the candle to change to what? Green. As it changes color, I'm going to enter. Now I'll not be talking about risk management here, but one thing I would do like to say is that since we are looking for something that is stable that we can repeat over and over, I would just like to tell you that you should keep it short. Don't overextend the trade. So let's just say we bought something here on our stop loss. Normally the stop loss should be at least down here, right? We should target at least 1 to 2 or 1 is to 3. So right now, let me just increase this lot size so that it makes some better sense. Let's just say 0.1. Okay, 0.2. Now at least is making a little bit of sense here. And okay, let's just say $4, right, as stop loss. We're having $4 here. We are having $4 as stop loss. So our take profit should be at least times 2 of this. Let's say $8 or $9. $8 or $9. That's 7 out there. $9. You get. So that's TP. TP was actually taken. If you ever put here $10, it would have still been taken. You get the idea. So one, we go to, we're on a 15-minute. On a 15-minute, we look for a direction candle. Look for direction candle. It comes in the 1 minute. We look for entry. Stop loss below the. If you know we're entering here, our stop loss will be somewhere down here. Then we're targeting, let's just say 2x stop loss or 3x stop loss. So it's actually a simple model. And all this is done on the Henkin and She charts, yes. Henkin and She charts during an actual session in New York or London, depending on the pair. Yes, we don't want to be trading Euro USD at 12 midnight. Like, who are the people that are having money at that time? Like the people in Europe that are sleeping, people in America are sleeping. What are you doing in the market? Except giving away some money. Okay, well, let's go back to the 15 minutes. Let's just say you're active that whole day. We have seen this, our guy here, right? We have seen this candle here. We have seen how we traded and made some cash on the 1 minute. So now let's just say you're active that day, right? And you're still waiting. You're still waiting. Now, see why I'll not like you to be inside there the whole the forcing trades. I'll advise you that you take one trade and sit you quiet. Mostly 1 to 2 paid trades per day. Because look, this is our signal here, right? This is our signal here. We entered, we came out. You discover that this is another signal. And this another signal. The truth is that you don't know when you'll go. You don't know when you'll go. That's why if somebody saw this one 8:45, you'll be looking to enter at 10 o'clock, right? You'll be looking to enter 10 o'clock. Let's see what happened at 10 o'clock. This is 10 o'clock. Discover that the next signal that showed did not even take a move. You get. That's why I said you know every time, but the probability of it working is very high. Good. So it's just a model, like as I said, that you can build on top, a trade idea that you can build on top. So let's go back to our 15 minute. 15 minutes, and we're looking. Remember what we're looking for. Now that we're going down, we're looking for actually a candle that has this color, this shape, a flat head, long under. And where do you see it? You see it here. You see it here, right? You see it here. So right here we have full signal, full signal. Okay, 10:15. We're looking for a signal at from 10:30 onward. We go to our 1 minute of signal direction down. So as from 10:30, we're looking for a downward signal. And this is 10:30. 10:30 gave us 10:31 gave us a good signal. 10:31 gave us a good signal. So we said here stop loss potentially up there. That's 4.6, right? Or just say times 2, or just say 9.5. And we hit our TP somewhere down here, and bam, that was it. It's quite like that TP could have been taken. Okay, get the idea. Let's take one last just show of idea. One last show of idea. We have 15 minutes again. Let's change the day. Maybe we'll be saying that okay, that day was a type. Let's take December 12th. No, that one looks like a good trend. Let's take December 18. December 18. Let's take December 18. So actually the day started. We had some good pushes up. Remember, I was waiting for 8 o'clock. This 6. This 7:30. 7:45. Guess, are you seeing what I was seeing at 7:45? Look at this candle where I'm pointing to. Look at the time, 7:45, right? We're waiting for 8 o'clock. And that 8 o'clock is London time. No, 8 o'clock is London time. So whatever you do, however you would like to keep track of that time is your concern. You can use external time clocks. Even our Android phones these days, they have a way of keeping track of time from different time zones. So we're seeing candles, we're beginning to see candles like this at 7:45. So now 8 o'clock already looks fruitful. You understand? Yes, 8 o'clock looks fruitful. So now, where am I going to? Lower time frame, 1 minute. This 7:45, that means 8 o'clock. I'll be looking for a sell. Remember, flat hit, long under. Flat hit, long under. So we go to our 1 minute. December 18 and 8 o'clock, right? 8 o'clock, voila. So at 8 o'clock we had this sell signal here. Now this is actually a good example. Because now somewhere that sold here maybe would have put the stop loss up here. You get, and you could have gotten stopped up. Now that's where, as I said, you need to work on you need now to work on your loss, how you manage your losses. I would like to say that after you lost, it will be good that you cut your position in half. Again, as I said, this model is adapted from ICT, so I'm just mostly picking some of his ideas and giving it back to you. So ICT will basically tell you that when you try something like this, right? Normally you see we had a cell here, it changed color. Somebody will normally put a cell here. You will normally put the stop loss up here, and he will get stopped up. Okay, the market was going to clear him eventually up here. So now ICT will tell you that after your first loss, you slice your position in half. Let's just say I was using 0.2, right? Yes, I was using 0.2. I go down to 0.1. Then I try again, and you discover that this time it would have gone. You understand? But now it's not good to put the stop loss to at least just give it a little gap, because the Henkin and she is more of a calculated. Like these bars you see, they're not the actual prices. There are times that this even if said I'm putting here, you discover that in real trading you may enter around down here. Yes. So now two, where am I aiming for? Maybe four, and that's it. TP. You get. Okay, for now that's the model. That's simply a model. And I'll tell you that go and build on it. It's just simply a model. Go and build on it. Yes. Especially if it's that you have someone who has been following ICT, you check about his risk management, how he deals with losses, how does he come back, and all the like. My idea for this video was just to give you an idea. Yes, an idea that you can use for entering a sell or entering a buy. So it's you now to go and build on it. See how you will manage the probabilities. Actually it has a high win rate. It actually has a high win rate. So I'll be recommending ICT. Yes. Recommend ICT. See how it does his position sizing and all the like. Then try for yourself. Know what works, what may not work. Maybe for some of you, you may instead choose 4 hour and 15 minutes for entry. You see, it's still a preference. But for this video, I've used 15 minutes and 1 minute. So it's just to go with it, go and play with the time frames and all the like, see what works for you, see what doesn't. Yes, and build a model out of yourself, or a model for yourself out of the idea. Yeah, so what I've given here is just an idea, just ideas. You know how to balance it. And I'll also say it's not something that have like it's not 100% sure something. So know how to manage the probabilities. Know how to manage the probabilities. Learn how to manage the probabilities, if I should say it in a better way. Alright, till next time, next video. Hope this video has helped you. If you have not yet liked and subscribed.